Welcome back to the final round. Well, one stock bucking the downward trend today is Tesla, with shares closing up just over 1%. It's a big week for the company. Investors closely watching its highly anticipated battery day for tomorrow. And for more on that, I want to bring in Colin Rusch. He's Oppenheimer's senior research analyst. And Colin, I know you have an outperform rating on the stock, $451 price target, but how big of a deal is Tesla's battery day tomorrow? What should we expect from the big announcements?
I think this is a really important day for them to really share where their technology leadership really is compared to other folks. When we look at, the highest leverage point within the EV powertrain, it really is the cell technology and the materials within that cell technology. And so we're looking for a roadmap from them in terms of where they're headed with that cell technology and also the process technology that they're implementing for building those batteries. And we think they have some key advantages there and are looking forward to some additional detail.
Hey, Colin, Rick Newman here. General Motors has now branded its battery technology, the Ultium battery or set of battery technologies. Can you tell enough about how that differs from Tesla's battery technology to tell, does either one of these companies have an advantage? Are they different yet similar, or what is the deal?
We're going to find out a lot more tomorrow. I mean, what we saw from GM, it was really, something that's been on pretty much everybody's roadmap for development of cells, and they just put a time frame around it. And so what I think we're looking for tomorrow is any sort of departures from, the basic battery chemistries that folks are looking at in terms of the ratios of certain metals on the cathode side, and then looking at, what the density of the battery is. And that's the number that we're going to look for. GM had talked about a number on the order of 320 watts per kilogram. And I think Tesla's going to lay out a roadmap towards something close to 400 watts per kilogram. And that's something that, it historically has been seen as, getting to a solid state battery. We think they maybe have some additional pathways to get to that sort of power density. But you get two things out of that. One, you typically will get a much lighter battery at the end of the day for your distance. And so you can actually eliminate a certain amount of battery and weight from the vehicle and get better performance out of it. But additionally, you should get some improved cycle time and cost on that sort of power density. And that will help adoption rates as you're able to shrink the battery, but then also make it much lower cost to serve the function.
Well, there's also this expectation that we'll soon have a so-called million-mile battery, which I guess is more a question of durability. Are we close to that?
It's really something that we've seen them working on. It's, I think, related to silicon doping around carbon within the cell. And one of the process technologies that we're watching is this technology they bought in purchasing Maxwell Technologies. It's the dry electrode process. And we think as they're able to change the lattice structures within the materials, they should get better durability and an increased cycle life. And if that's the case, we could see them, walk out that roadmap to 2 million miles. Now, I think they need to be a little bit careful because, they do not have that battery out in the market. And if you lay that framework out for folks too soon, they may just wait for that product to come to market. So I think it's an interesting balancing act where they want to demonstrate their technology leadership tomorrow and walk us through a roadmap, but they don't want to share too much to, end up slowing sales near term.
Colin, I want to ask you just about the share price and the performance that we've seen at Tesla so far this year. What do you think is built into the share price at this point, and how much of it has to do with the battery versus its vehicles?
It's a great question. And certainly, I think there's a handful of things going on. Certainly, you have to look at, just basic leverage in the market and the cost of debt coming down so dramatically this year with Fed actions impacting, strategies around equities and growth equities. So when we take that aside, I think you've got, a clear technology leadership on the EV side that is now getting priced into the story. And then the question is really how much of their autonomous business is being priced in at this point. We think the key lever isn't necessarily their system, but it's really the number of cars that they have on the road, collecting data to really help the learning process of their neural network. And then the last piece is really about the power business, which I don't think is built into the price at all. They've made some pretty large claims. We think they can, disrupt the power market with their batteries and distributed power assets like solar. But they really have not had the focus or the capacity to really move that business forward. And so we may get a little bit of information tomorrow about that in terms of their battery capacity ramp. But, what they're talking about potentially doing in the power markets would require multiple gigafactories to actually deliver on that promise. And so I think, to answer your question, certainly we think that the technology leadership on the EV side, some of the AV technology, and then very little on this power business.
Hey, Colin, we've been talking a lot today about Nikola. I know you don't cover Nikola per se, but can you say whether you consider that company to be a legitimate future competitor of Tesla, or do you consider it more of a pretender?
So I'm not going to answer your question directly. I'll talk around it a little bit. But a couple of things that I will say is, one, entering into a new technology into the transportation space is very difficult. And we've seen Tesla do that in the public eye for a number of years. And so I think anybody that's coming into the space now is going to have to go through those teething years as they figure out how to make vehicles. The second thing is moving into the hydrogen market is not a trivial endeavor. And there's companies that have been working on this for a number of years in the public realm. You look at on the heavy duty side, a company like Ballard, which has actually got hundreds of vehicles on the road right now collecting data, or a small company called Plug Power, which we cover, that has forklifts in the market. And they've really gone through multiple learning cycles on the hydrogen side, which have been really challenging. And so when we look at the real duty cycle for the heavy duty market and semi trucks, I think there's going to be a lot of learning that has to happen. And certainly the powertrain battery technology, leverage into the hydrogen economy, there's still a lot of work to do, and it's very, very early days. And so I do think there's room for competitors for Tesla, but I think there's an awful lot of folks working on this right now. And, the challenge in front of Nikola is really delivering on some of those designs, and they're really at the early days right now.
Hey, Colin, I have more of a macro question for you, because in your base case, in your note, you talked about one of the things that needs to happen is that China needs to continue to ramp on production. And I want to ask you, just in what we've seen play out over the last couple of weeks with China-U.S. relations, the tension there rising a bit. We had the Wall Street Journal story today saying that China is compiling this list of companies to blacklist. How big of a risk is this escalating tension between the U.S. and China to a big name like Tesla?
So it's a good question, and I think a relevant one right now that not a lot of folks are asking. So any sort of international tension is a risk to every company. Domestically within China, Tesla is the only wholly owned vehicle company by a foreign entity within that country. And so, I think there was a trade that was made in terms of Tesla importing technology into China for ramp within the domestic market, and so I don't think that they're going to be bothered with this, with this trade war, potential between the U.S. and China. That said, you never know how these things turn out, but Tesla seems to be playing both sides of the fence pretty well in terms of building factories, creating jobs, and bringing the appropriate level of technology into those factories. And I think at this point, where every political regime is looking to create jobs, Tesla has to be seen as an ally in that effort, and likely will not be bothered in their operations because of the amount of jobs that they're creating in each geography.
Colin Rusch of Oppenheimer, Senior Research Analyst there. Thanks so much for calling in.